Hello, and welcome to myfinanceteacher.org. In this video, I want to have a look at the valuation of Agnico Eagle. The valuation is based on the discounted per share value of gold reserves in the ground after production costs and long-term debts. And we also account for insider shares, as insiders might turn out to be strong hands supporting the share price. In this video, Agnico Eagle valuation is the novelty, and I'm going to compare this with the valuation of Kinross and Kirkland Lake. Actually, in a recent video, we already had a look at KGC and KL, so they are not really a novelty in this video. Today is 30th of November, and the markets are just about to open in the US. I hope you had a nice weekend, and as usual, we're going to have a look at three scenarios for gold price. Balanced scenario, the price of $1,737, 21.7 for silver. These prices are about 2% below the ongoing spot price at the moment. Conservative scenario, gold price of $1,563 and 19.5 for silver. And optimistic scenario, price of gold of only $1,910, for silver 23.8. As you see from my video discussing the money printing, link at the top of the screen right now, you will know that I do expect gold prices to go far beyond $2,000 over the next several years. So even this optimistic scenario, in my opinion, is relatively modest. One more thing to notice is this sort of valuation, fundamental valuation of what the companies have in the ground and what kind of debts they're carrying, generally works in the long term. In the short term, all the different news flow might actually deviate the ongoing market price far from these valuations presented in this video. So let's move on to the reserves that the companies have, starting with the proven and probable reserves. We see that for gold, the proven and probable reserves of all of three companies are relatively comparable. The novelty here is Agnico Eagle, so their P&P gold reserves are nearly 20.4 million ounces. If you look at the company's reports, you will see a slightly larger number for these reserves. What I do in my calculations is I subtract the gold that the company has already extracted so far this year. And Agnico Eagle also has nearly 36.5 million ounces of silver in proven and probable reserves. As you see, that compares very favorably versus Kirkland Lake, which doesn't have any silver, but this isn't as much silver as Kinross has. Looking at measured and indicated resources, we see that Agnico Eagle has nearly 18 million ounces in gold, Kinross has much more than that at 35.5 million ounces, and Kirkland Lake has nearly 11 million ounces in measured and indicated resources. For silver, Agnico Eagle has similar amounts of measured and indicated resources of silver versus Kirkland Lake, both at over 34 million ounces. Looking at the production costs, Agnico Eagle is at the highest production costs of around $1,050. That's from the midpoint of the guideline for 2020, followed by $970 per ounce for Kinross and $800 for Kirkland Lake. The companies don't report their all-in sustaining costs for silver, so I'll just use a gold-silver ratio of 80. Looking at long-term debts, Agnico Eagle does have quite a lot of debts at nearly $1.7 billion. Kinross has nearly $1.5 billion in debts, and Kirkland Lake has almost no debts at only 16 million. To use up the space on the slide efficiently, let's have a look at forward dividends as well in percentages, but these are not included in the valuation model. It's 2.17% for AEM, 1.6% for Kinross, and 1.8% for KL. Looking at number of shares outstanding, this data is from Yahoo Finance. The rest of the data from various reports on the company's websites. AEM has over 242 million shares outstanding, Kinross has 1,260 million shares outstanding, and Kirkland Lake has 273 million shares outstanding. Out of all these shares, insider shares for AEM are only 0.11%. In Kinross, insiders only hold 0.29% of the shares, and for Kirkland Lake, that number is nearly 4% at 3.96% held by insiders. We do take into account the time value of money. I use a discount rate of 5%. And for time, I look at proven and probable reserves in years. How long will it take to extract those reserves out of the ground? The numbers are somewhat comparable at 12 years for Agnico Eagle, 9 years for Kinross, and 14 years for Kirkland Lake. That's based on the reserves in the ground and annual production. If you throw in half of measured and indicated resources, why half? Because those are a little bit less certain than proven and probable reserves. If you throw in these resources, the time to extract everything out of the ground turns into 17 and 18 years for these companies. And all of that brings us to our valuations, starting with the conservative valuation, where again, we use a gold price of only $15.63 and a silver price of only $19.50. And in this conservative valuation, we only look at proven and probable reserves, and we don't include any of the measured and indicated resources, as those are a little bit less certain, and that makes our valuation that much more conservative. Before we look at the numbers, a quick break. Let me point out some of the highlights we've had at myfinancesteacher.org so far in October and November. Our Bitcoin gains have been amazing at over 58%. Our investments on oil producers has done and is doing very well, with the gains on different producers ranging anywhere between 30 and 40% just over the last several weeks. And also over the last several weeks, we've been doing relatively well on coffee and some other assets as well. So if you're interested in more frequent and detailed analysis on a range of assets, check us out at myfinancesteacher.org. An interesting product that we have at myfinancesteacher.org is the portfolio, where I track all of the trades that have ever happened, which provides great transparency on all of our gains as well as losses. I would guess that not many other analysts would track their performance with such transparency. Welcome back to the conservative valuation, where we have $32.81 for Agnico Eagle. That actually doesn't compare well with its ongoing market price as it closed on Friday at $64.47. That gives you a negative undervaluation, meaning that gives you an overvaluation of 49% based on the ongoing market price. The conservative valuation for Kinross is $10.32. That's below the ongoing market price of $7.11, which gives you an undervaluation of 45% against the market price as it closed on Friday. And for Kirkland Lake, the valuation is $53.31, which compares favorably again versus the Friday's closing price of $40.22, giving you an undervaluation of 33%. Clearly, as an investor, you generally want to invest into undervalued assets, as when the assets return to their fair value, you will obtain a nice gain. And usually, as an investor, you don't want to invest into overvalued assets. Although if gold price shoots up from here, all of the miners, over or undervalued, are likely to go higher. This reminds me, in full disclosure, as the members at myfinancesteacher.org know, I am invested in Kinross and Kirkland Lake, and I'm not holding any shares of Agnico Eagle at the moment. Next, let's move on to the balanced scenario. If over the next few years gold price fluctuates somewhere around 1737 and gold price fluctuates somewhere around 21.7, again, only looking at the company's proven and probable reserves, all of this in addition to the company's debts and all the other data we've looked at above, that gives us a valuation of $45.96 for AEM, which still doesn't compare favorably versus the market price of $64.47. That again gives you an overvaluation or negative undervaluation of 29%. So that's not a great sign. For Kinross, the balanced valuation is $13.38, which compares favorably to the market price, giving you an undervaluation of 88%. And for Kirkland Lake, valuation is $64.82, which compares nicely to the market price with an undervaluation of 61%. And lastly, looking at the optimistic valuation, say over the next few years, if gold price fluctuates somewhere around 1910, silver price fluctuates somewhere around 23.8, and if we add half of the measured and indicated resources to the proven and probable reserves of the companies, that will be $83.48 for Agnico Eagle, which finally compares favorably versus the market price, giving you an undervaluation of 29%. For Kinross, the optimistic valuation would be nearly $28, which compares very nicely versus the market price, giving you an undervaluation of nearly 300%. And for Kirkland Lake, the valuation is nearly $95, which is also very favorable versus the market price, giving you an undervaluation of 135%. So given these numbers do look amazingly impressive, before we look at the highlights, let me leave you with this question. Do you really think that Kinross is going to, say, triple in price over the next, say, 3 years? Let me know in the comments below. While you're there, hit the like button and subscribe to the channel. Lastly, let's have a look at the highlights, what I found interesting about the companies while looking at their reports. Two of the companies, Agnico Eagle and Kirkland Lake, have actually increased their dividends in the fourth quarter this year, while Kinross restarted paying their dividends after a long break of 5 or 6 years. Another highlight for Agnico Eagle is that they also produce some base metals such as copper and zinc, which might actually help support the share price, even given some overvaluation we discussed above. For Kinross, another highlight is that they expect to increase production by 500,000 ounces by 2023. If memory serves well, that would be around 25% increase in their annual production, which might prove to be very positive for their share price. And another highlight for Kirkland Lake is that their Macassa mine production is expected to double to 0.4 million ounces also by 2023, and which also might prove to be a nice catalyst for the increase in share price of Kirkland Lake, say over the next few years. That's all for now. I wish you a productive Monday and good luck in your trades.